Let's talk about Uber now. Those shares are getting hit and hit hard today after the company reported a record quarterly net loss of more than $5 billion. The Deutsche Bank and several other firms is sticking with that story, though. They reiterate their buy rating. They raised the price target to $60. Of the calls today, Joe, this was the one that had the highest price target.
It did.
All right, so talk to me about this. So you can spin it, if you want to use that word, in a number of ways. They had several non-recurring expenses in the quarter, okay? That clouded the balance sheet picture. They still lost a lot of money. They still have an uncertain road to profitability.
Correct.
You tell me, what do you do?
So I have tried buying Uber 2 times. In both those instances, one was successful, one was rather unsuccessful. The equity compensation is not unique. Everyone knew going into this quarter that that was going to be reported. That's normal coming out of an IPO.
It was like the IPO expenses. You had the driver recognition awards.
What is
X that and back that out, they still are losing a lot of money.
2 words that are concerning, that if you believe Deutsche Bank is right, you have to have growth accelerating. How is growth decelerating for this company?
Well, I got 3 words that are important, too. Cash flow negative.
Exactly. And forgive me, I don't know if it was Mark Cuban that might have suggested it, but I know I've spoken about this. I still think that Uber is being punished for IPOing too late. They should have done this a couple of years ago.
Point was like they're too mature.
I don't know if you may well be right about the IPO timing, but I don't think that's relevant going forward. The issue here is what you said is negative cash flows that, at least in the reports I saw, are projected out to 2022. And the CEO didn't exactly sound ebullient as far as when profits would show up. So what you've got here is a company that is eventually probably going to have to raise capital. This kind of reminds me a little bit of Tesla, which has not been a great stock to be in, except for that initial ride, which was all propagated by this luminous personality of Elon Musk. You don't have that at Uber, so all you've got is a company that's going to have to raise a lot of cash flow losses as far as the eye can see, and nothing to prop up the stock.
Judge, one of the positives here was that they say, although it's wildly competitive, ride sharing that is, and the CEO cited this on our network, that as competitive as that is, he sees that bottoming out as far as, the pressure on the price for per ride. Mm-hmm. However, what they own right now in their Uber Eats is what they're most vulnerable in, because that's not defensible, really. And that pressure is going to push much lower because that's been one of the bright spots in Uber. So I think that's one of the reasons that people are dumping it so aggressively here today.
I thought that, you mentioned Dara Khosrowshahi, the CEO, is on the network this morning, and Faber participated in that. And I thought he raised a really good point earlier, just before our show, whether they were always going to be fighting a battle somewhere, whether it's fighting with, to get market share and keep the market share from Lyft. If they're fighting to get into these other bigger markets, if they're fighting regulators, like they're, embroiled in this controversy in New York City and elsewhere. Is that ever going to go away?
Well, that's a great point, and it's indicative of why I believe they IPO too late. I disagree with you on the growth, and I'll get to that in a second. But think about the culture. They were fighting the culture fight for many years at Uber, and that pushed off the timing of the IPO. Now, why I respectfully disagree with you, Jimmy, is growth is so relevant to this company, okay? And if we are at the point where this is a mature company and you're not going to see the reacceleration from 12% growth, and this is a company long-term that's not going to hit the $60 mark. You need to see this company have the growth deceleration trough right now, 2019, 20, 21, 22. It's got to reaccelerate once again, or there's a problem.
I'm not sure you're disagreeing with my main point,
quick here,
which is basically that they're going to have to raise cash. Do I want to be in a stock that's almost certainly going to get diluted further on? I don't.